Hey guys, Max here, and today is going to be a little bit of a different type of video. It is Berkshire Hathaway's annual shareholder meeting, and there are loads of interesting things coming out from Buffett and Charlie Munger, and so I'm just going to show you all a few interesting clips that I found and thought were quite interesting. I will give just a little bit of context before each one, clarify if I agree or disagree with what's being said, so let's get right into it. Now first, we have Buffett's views on Bitcoin and productive versus unproductive assets, things like real estate versus gold, and in general, I actually agree with him, but the point that I do have to bring up before I show you his point of view is that property rights, fiat currency, gold, Bitcoin, all things like this, they're only worth something if people believe in them, and I personally think that Bitcoin has surpassed that point where enough people in the world believe in it that it does actually have value. That's something that Buffett does not agree with me on, as you will see now.
Well, I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, for a 1% interest in all the farmland in the United States, pay our group, well, let's see, 10 trillion, pay us this bargain price, $25 billion. I'll write you a check this afternoon, $25 billion, now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be for it, and call it another $25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net, if you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. I mean, other people have entered the room and they move money around, but there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved, and a whole bunch of things you lose. You forget the numbers or forget the equation. You can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible. I mean, you can say a great painting, probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name at some point, there will be a few things. I mean, you can find something. If somebody wants to sell you a pyramid or something, and you can charge the viewers, or it'll be around a long time and won't produce anything. But people will find it interesting to go there because I've read about the pyramids. But basically, assets to have value, they have to deliver something to somebody, and there's only one currency that's acceptable in the United States. I mean, you can come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer, there's just under 2.3 trillion just of these little pieces of paper floating around some places, 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change to where they let Berkshire money replace theirs, is out of their mind. I mean, so anyway, with those few deficiencies, you can, whether it goes up or down in the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it, and people have attached magics to lots of things. I mean, the gold in Wall Street, create magic. We are not an insurance company; we're a tech company. Well, they're an insurance company, but a dozen people or so have raised a lot of money. They just don't pay any attention to the fact that we sell insurance. We are a tech company. Well.
Now, next, we have something that came out of Buffett's mouth that I wholeheartedly disagree with, and that is the fact that Buffett thinks that Jerome Powell is a hero. Now, I've made it perfectly clear what I think about him. I've made my views known. I do not think Powell is a hero. I think he's, perfectly honest, a weak man who lacks the strength to make hard decisions, and that led to inflation getting as bad as it is today, and that's also made the idea of a soft landing, of getting the inflation rate back down to a reasonable level without a recession, practically impossible. But what exactly does Buffett have to say?
It's you print loads of money, and money is going to be worthless. Not worthless. I got in trouble doing that one time with CNBC because I said it was going to be worth separately less, but it got contracted down to worthless. So I took me a few years to learn to separate those words somehow. Anyway, that's everything I know about economics and more, and Charlie can probably improve on it.
Well, it happened on a scale this time we'd never seen before. Those checks that were just mailed out to everybody who claimed to have a business and claimed to have employees, they probably drowned the country in money for a while. And as you say, they probably had to do it. But it was something that had never been done on that scale before.
But we had a problem we hadn't had before.
Yes. Oh, no, I'm not saying it wasn't a good idea.
I mean, in my book, Jay Powell's a hero. I mean, it's very, very simple. I mean, he did what he had to do. When if he had done nothing, it would be. He would be. It'd be very easy to engage in what you would call thumb sucking. Then, and plenty of. I shouldn't say plenty of, but there are other Fed chairmen that would have been sucking their thumbs, and the world would have fallen around them, and nobody would have exactly blamed them. They would have blamed the virus and the Chinese and all kinds of things.
Now, finally, we have Buffett's recent investment into Activision, which is a huge video game manufacturer who is currently being bought up by Microsoft. And this presents the possibility for some price arbitrage trades, as Activision trades right now at about $75 per share, but Microsoft will be buying it for $90. Now, this is very similar to the price difference between Twitter's share price right now and Elon's offer for it, so I thought it was quite interesting to get Buffett's point of view on this sort of arbitrage trade. You will note that the potential gains from this deal are actually getting close to 20%, so really quite appealing.
Oh, I should make a little news here. So, you've all come, and you may or may not see this, but it's very possible. One of the things I bought, was bought for a different purpose by a different manager months earlier. He bought roughly 15 million shares of Activision, and I never paid. I knew about the company, but I would just see it at the monthly report. But then on January, 17th or 18th, something like that, Microsoft announced they were going to buy Activision for $95 a share. Now, when they announced that, at that point, Activision becomes a different kind of security. It becomes what Charlie and I used to call, everybody did, 50 years ago, we call them workouts or something like that, and they become known as arbitrage. Well, they're not really arbitrage, but they're securities, or in this case, a common stock, whose value depends not on what the market price does, but whether a given corporate event occurs, an announced corporate event occurs. Well, Microsoft wants to buy Activision, we'll say. Well, they said at $95 a share. And they've got the money. And obviously, mergers and big mergers, tech companies, all kinds of things, have got all kinds of problems with the world generally in terms of opinion. So you don't know what the Justice Department will do, or you don't know what the EU will do, and all kinds of things. But at that point, it becomes a different security. And Charlie and I, 50 years ago, we used to do a lot of that sort of thing. And Gus Levy did it at Goldman Sachs, and we even went back one time, I think, on British Columbia Power, didn't we, Charlie?
Yeah, we certainly did.
Yeah, a guy named Bennett was up there, and we were trying to figure out whether some takeover of the power business. I mean, we spent a lot of time analyzing the probabilities of announced deals going through, and we call them workouts. Now the term became ARB, and it hasn't worked overall too well in recent years. Now, every now and then, I see something that I want to do in that field, but very seldom, because they got to be big. The profit is limited. You know, if they say you're going to get 95, you're not going to get 96, and if the deal blows up, you may have a stock that's at 40 or something. So but we did it with Monsanto 5 or 6 years ago when Bayer was buying it, and we got very lucky because it turned out to be a terrible acquisition for Bayer, but it did go through because Bayer had the money, and they went through with the deal, even though Monsanto came with a problem that nobody really understands to the extent of. And we did it with Red Hat when IBM bought it. So, in any event, on January, whatever it was, 17th, 18th, 19th, Microsoft announces it, and the stock, which had been at 60, let's see I may have a slide here, which I'll find, but in any event, the stock, which had been in the 60s, went up to the 81 or 2, and that looked like not a big enough spread to me for a few days. And then it settled back a little. So anyway, we now own 9.5%, something like 9.5% of Activision. And if we went over 10%, we would file a report. So in order that the news people don't feel that there's no news there, I can tell you that as of yesterday, we own about 9.5%. If we go past 10%, there'll be a form filed with the SEC and so on. But it is my purchases, not the manager who bought it some months ago. If the deal goes through, we make some money, and if the deal doesn't go through, who knows what happens.
I do hope you found this video interesting. I know it's a little bit different to what I normally put out, and I wasn't actually planning on putting out anything today, but I decided to just do this little bit in the end. So if you like this, let me know. If you want more stuff like this, let me know. Or if you just want me to stick to the usual content. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that can help you protect your portfolio against inflation through fractional shares of art from world famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink. It's completely free to sign up, so make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. Warren Buffett might not value that, but I personally do. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. Thank you all for watching. Stay stoic. Until next time.